Boy, welcome to another week of nothing. We've been moving sideways for the last 6 weeks, and it felt like, we just haven't been going anywhere in the market. And we've been tracking this for the last 6 weeks. Like last week, I talked about we were stuck inside of a triangle, and we had a tilt to the downside. We saw a nice big sell off on Friday, 1% down on the SPY. So we're going to keep an eye on that and how it's going. But now we're in the heart of earnings season and we're back to a war with Iran, which adds a whole bunch more volatility to the market. And when there's volatility, that means there's uncertainty. And when there's uncertainty, the market makers don't like that, right? The institutions don't like to know that there's uncertainty in the market. They don't know which way it's going to go. And hopefully this week will be the first week of sending which direction we're going to go outside of this triangle. We're going to look at that on the chart this week as well. The other thing we got to watch is inflation has been sticky at 3.5%. So we're not seeing any breaks there. Prices are staying high. They're continuing to stay high. You got to wonder how much longer people can continue to live with these higher prices, especially now that the war is back on. Gas prices are going to go back up. So this is another thing we got to pay attention to this week as we start earnings season and get into the first of two major weeks of earnings in the market. I'm the Wall Street Yardie. This is the week market report for the week starting July 20th. This is where we'll get you set up for Monday and the rest of the week so that you know where the market might be headed before you take any trades this week. Get your head around what events might happen, some key moments in the market you need to watch before you take any trades as the week progresses. So let's jump right on in. All right, as you can see this week, our earnings card is full. We start the week by wrapping up the bank stocks earnings here on Monday as we open up. Before and after close, we have a few key bank stocks that are going to get triggered there. There's one sleeper stock I have there that's going to report after hours on Monday. That is a stock by the ticker AGNC, AGNC Investment Corp. It's a REIT and it's a steady earner with a 14% dividend. This is a steady cash flow machine. It's a position that I just love. I have right now, and it continues to pay. They pay out their dividend every single month. So every single month, my cost basis is reduced on the stocks that I own in this particular name, and it's just been steady over the years. It's actually been rising the last couple weeks here, so we're going to pay attention to that and see what they get coming out of their earnings. If that continues to be steady, and maybe we have some upside there. Wall Street already has a $28 sticker price on that one. So we're going to look to see if we can move from that 11 to 28 while collecting that dividend. The next one I'm kind of watching is 3M, which is a huge manufacturer. They've been having a good run the last probably year and a half. So their quarters have been excellent. It kind of shows that manufacturing is back, industrials are back, and the things we need to build other things and be productive. Those are the types of things 3M makes. So we're going to pay attention to that, make sure the foundation of the economy looks good. And then Wednesday, that's the big day. Things start to kick in. Before the market opens, we're going to have GE Vernova, which is a huge AI energy play. So we're going to want to pay attention to that. They're the leader in that AI energy space. And then after hours, then Wednesday, we have Tesla and Google to kick off kind of the Mag 7 earnings. As well as IBM, which is also another big player in not only in AI, but also in quantum. They've pre-reported last week. Their stock dropped 20% because they're going to miss. And they also cut guidance, which is kind of a warning sign coming into the earnings season here. Are the others going to kind of follow suit with IBM and be cautious in their guidance as well? The other big one I have here is Texas Instruments, who's really starting to get its legs in the AI chip space as well. And then Intel on Thursday. So we got a couple chip names. We got a couple big companies with Tesla and Google. A lot of stuff is kicking off this week. Next week, we're going to see even the rest of the Mag 7 report and see kind of where that takes us. We then round out the week with some energy infrastructure, especially with Iran kicking off, the oil thing kind of still becoming a problem again now that we're out of the peace deal. So you're going to watch Booz Hamilton. We're going to watch SLB or Schlumberger. These guys make oil equipment, so the more these guys destroy with the war, these guys are going to have some good future prospects here. So let's hear what they have to say about that going forward. Those might be some good things we need to pay attention to here in the near future. And then finally, at the end of the week, we get American Express, which will give us some visibility into the high-end consumer. This is the part of the economy that's been standing strong. The high-end consumer, they spend a majority of the money, and this is, they haven't been hurting. They've been traveling, they've been spending, they've been continuing to do what they do. And we want to see if that is going to continue. And American Express is probably one of the best ways for us to get visibility into that, because that card caters to those high-end travelers as well as the business traveler as well. So we'll get some feel for travel. We'll get some feel for the high-end spending. So we're going to pay attention to that, see if there's any weakness in the economy that we need to be paying attention to for that as well. So with all that said, let's jump into the charts and see what levels we need to be paying attention to know whether we're breaking up or breaking down. We need to know which way and what levels we need to pay attention to as things kind of come into the market when we get this new news with all these earnings that are about to pop. So we're going to pay attention to the earnings here every single day this week, kind of see which way it swings starting after Monday. We're going to get, kind of that first feel for things, and then we're going to jump into that. So let's switch on over to the charts now. And let me get you those levels and show you what I'm watching on the charts. All right, as we take a look now, this is our SPY, S&P 500 ETF Trust 1-day candlestick chart. I've got some levels already marked up. We've got a bunch here below from prior weekly market reports that we had. However, as you can see here, I have my triangle drawn out that I had from the last couple weeks. So you see price was kind of stuck in here for the last 6 weeks. We really didn't have any action. In fact, where we closed on Friday was right here, pretty much almost in the middle of that candle. We traded right in the middle of this triangle this last week with some peaks to the upside. I thought, at the end of last week or going into last week's trading week weekly market report, I showed, we had some positive upside here on that Friday. We actually broke out of the triangle. We had some decent volume. It wasn't so great. That was the thing that was giving me some pause. I gave you the level of the 766.50 to watch to the upside, which is a prior Fibonacci level that we had added on the chart as a Fibonacci extension from the previous high back here. So we've been paying attention to see if we could get there, and it looks like we can't. Or and it doesn't look like the market wanted to get up there this last week. Maybe they were just waiting for earnings to come out. We're not sure what kind of caused it. Then we got the CPI report. That was a little high. Market didn't really like that. So we started getting some weakness shortly after that. So we had this pop here on Friday, pull back into the triangle on Monday. We popped back above that on Wednesday, Thursday, and then Thursday, we started to see some more weakness. Here we got back in, and Friday morning we gapped down significantly. I mean, Friday's candle, very high volume here. So this is the thing that I'm paying attention to, right? If we get the direction, which is in this case is a gap down, and gaps are, something we talk about all the time on this channel. So you want to pay attention to the gaps, because when they signify momentum as well. So we see this gap down. We want to pay attention to that. We opened, for those of you not familiar with how the gaps are created, we opened here down at 741 in the very morning time, and then we traded all the way up to about 747, right? So it looked like, right around noon as I was watching this on Friday, that we might get a good positive day. We probably would stay inside the triangle, which is what I thought. We didn't quite close the gap. There's a few pennies here between the low of Thursday and then the high of Friday. So we pushed all the way up here, and then they sold it off into the afternoon, which is weakness. And then so that weakness going into Friday afternoon with this high volume tells me that we're probably headed much lower this week. But again, the thing that would make me wrong in that prediction to go lower below this 740 down to 725 is what I'm thinking, is that we do have earnings. So if earnings come in strong and Tesla reports strong earnings, Google tells us that they're not going to spend as crazy as they are, or they can prove where the return is going to come from the debt they've taken on. They took on an $80 billion debt a couple weeks ago to build out more AI infrastructure. And then if ServiceNow can step in and say what it's going to look like for their software licenses and software sales going forward, and kind of help us understand that the blow that we think AI is going to give to a business like ServiceNow is going to be much smaller, then we might see some upside. If Vernova comes in and says they have more orders as well, and the data center build outs are going well, and they're collecting the money, that might also be another big catalyst, right? So AI energy is a big piece of the pie right now, and everybody's kind of talking about that. So, while I think we could go down, and in normal times, if we didn't have earnings, and earnings is news, right? So that news has not been officially, let me say it like that, factored into the prices yet, right? So until we get that news, until we get those reports, we really don't know which way the market is going to go. Now, there's always insiders. There's always people, trying to get the news before everybody else. So we watch the volumes on some of these names ahead of time just to kind of see which way things are leaning, right? So maybe on Wednesday you could see if they're trying to push up one of those names or push it down. That might give you a lean to which way it's going to go. But until that earnings report comes out, until we see the market reaction, we have to be cautious. I like to sit back, let the earnings play, and then follow the direction of the market after that, right? We just want to react. We don't want to predict in this situation. So we're going to be very cautious. We're going to let the earnings play out. Come Wednesday afternoon, we'll probably have an idea of where things are going after the market closes on Wednesday. And then Thursday and Friday are going to be big trading days, as we have those big earnings from IBM and Google and Tesla on Wednesday afternoon, as well as the GE Vernova trade that would have progressed throughout Wednesday during the day as well. So Wednesday's going to be a huge day. That's the day we really want to pay attention to. So be cautious. Any trades you're thinking about on Monday or Tuesday, if they're going to be market heavy or tech heavy, I'd say be a little cautious. Stay light. Keep your size small so that if it does go the wrong way, you're not going to get too hurt by it. And then we're going to pay attention to what's going on. But if I'm looking at this just pure technically without the earnings situation, I'm guessing this will come down to 725 is where I'm predicting right now. Now, there's a lot of market weakness, especially with the AI memory names right now. Micron, SK Hynix, and Samsung, all out of South Korea, are all experiencing some drawdowns right now. Those things have run up in a major way. There's been a huge sell-off the last couple weeks. I think Micron was down 48%. SK Hynix actually just IPO'd onto the US market last week as well. They had a big bump first day and then it crashed out the next couple days, right? So we're going to pay attention to that because that is a place where the institutional investors were trading heavily. They were invested heavily, and now those are big and down big. And I've even seen news reports that the stock market out in South Korea had a lot of liquidation. So a lot of people were buying those stocks on margin, which means they were borrowing money to invest. And then when the market crashed 20 or 30%, they got liquidated, meaning that their accounts got closed. Some people even owe their brokers money now because they borrowed the money and the thing crashed so much, right? So we want to stay away from that. That's not how we trade here at Wall Street Yardie. We're going to use our own money. We're not going to try to borrow money and get leverage and get greedy with it. We're going to take the money we have, use it wisely, take smart risk, and make sure that we size things appropriately so that we don't get hurt by any one trade. So that's what we're going to pay attention to here. So as we go into the week, like I said, look like we're going sideways, look like I'm headed to the downside, right? Now, if earnings come in really good on Wednesday afternoon, after hours, then you now already have your target to the upside. So we're going to watch that. We're going to need to see a big volume break here. The way I have my chart set up, and you can watch the Wall Street Yardie trade setup or chart setup on a previous video that I did. I'll link that in the description below, as well as the cards that you see here at the top. So you can click on that to get to that video. We're going to be able to watch 766.50 here to the upside, 725 to the downside. If earnings come in really good, we know kind of where we're headed. We want to see that volume. If we go up, we want to see that volume start to increase here. It needs to be higher than this orange line here, which is my daily average volume, right? 21-day daily average volume is what I'm tracking here. I want to see this volume bar, right, above this orange line, right? That tells me that these are high volume days, the days that it's above it, or at least touching and breaching it, right? You really want to see volume at 110% of what the average is before you could say that's a strong candle or that's a strong move to the upside. Otherwise, it's just average and normal, and we'll probably end up getting some more sideways action if the volume continues to stay low. Now, we are in the summer trading season. Things can get manipulated in summer trading season because a lot of traders are off or doing summer vacation type things. So, a lot of the normal activity is not always here. And you can see we have had lower than average volumes recently. So we want to kind of pay attention to how this plays out. We have a good guide here from Friday. Now, there was no earnings on Friday. Friday was option expiration Friday. This volume is a little bit tilted to the upside for that reason. We still want to pay attention to this volume. It was straight up to the downside, even though it was options expiration Friday. We're going to pay attention to that. And then see what happens here on Monday. Do we, get a small candle to the upside? Do we fill this gap in reverse? We're coming to the apex of our triangle, which also a lot of times is a jumping off point. So that apex would be next Monday, July 27th. So, this is the last week for us to get out of this triangle, and we need to see which way we're going to break. So right now, be cautious Monday, be cautious Tuesday, pay attention to the earnings reports on Wednesday. Watch on Thursday morning how the market breaks, and that's probably going to be your guide to how the market is going to react to these earnings. If earnings come in strong and guidance is strong, right? Not just that they beat is history. The market works on future. So we want to see that these companies not only beat, but they also want to see them raise, which is probably the most important part of the earnings, is we want to see them say, hey, yeah, we expect more earnings, even more earnings, and for our growth to continue and stay strong into the next quarter, right? So that's the key piece, right, that we need to pay attention to. So we're looking to the downside, 725 this week. Upside, if all earnings go well, 766, possibly higher. If we get higher than that, I'll come on midweek and let you guys know where I think it's going and the reason why I think it's taken off. Stay tuned for that next week. I'm the Wall Street Yardie. This has been the weekly market report. Hopefully it's been helpful. Get your mind state ready here for the trading week. Pay attention to those earnings. Make sure you hear beat and raise. All right, I'll see you next week.